Hello and welcome to our discussion on the overall cash budget exercise. With this one, by this point, you should have already completed a cash receipts and a cash disbursements budget. You need those two budgets to complete the overall cash budget. So what we're going to find here is that the information is already given to you, but in a real full-blown example, you would have had to do multiple budgets in the master budget to get to this point. So we're just focusing in on this one piece for now. So let's take a look. December 31st, 2017, the balance of cash, which is last year's balance, as we'll see, it's $3,500. So that's last year's ending balance, which means it's this year's beginning balance. We'll see how that plays into the overall cash budget. Now, number 3 is the piece that adds complexity to these overall cash budget examples. Here, the company has implemented a policy effective this year. So this is the first time we've had this policy that they will begin maintaining an ending cash balance of $20,000. In other words, they don't want to fall below $20,000 at the end of the month. They want to make sure they have at least that. Now let's stop right there for a second. Obviously, they did not meet $20,000 at the end of last year because they're only at $3,500. And that's fine because this policy just came into play at this point. Now, $20,000, depending on the size of the company, it might be a little bit outrageous. The numbers just happen to work out for the example I was working, so I'm setting it at $20,000. And the thing with these desired ending cash balances, the reason they exist, for one thing, is that sometimes companies want a little bit of cushion just in case something happens and a check didn't get recorded properly, or they have a last-minute purchase they need to make. They don't want to run short of cash, so sometimes they have this desired ending balance. Now, the thing with these is that they'll generally borrow money even just to have that money sitting around. So in this particular case, they have a credit line established, and they're going to borrow the necessary money to make sure they hit the $20,000. But then they're going to pay it back as soon as they can. They don't want to borrow it forever. As soon as they have more than the $20,000, they're going to pay it back. Now, the credit line in this case requires an annual interest of 12%, which I did that on purpose to make it an easy 1% per month. 12% might be a little bit on the high side for an average company. Just kind of depends, but we're setting it at 12%. So that's 1% per month. The company makes all borrowing and interest principal payback at the end of the month in question. So they'll borrow at the end of the month, and they'll pay back at the end of the month. What that means is that we always have a nice, clean 1-month interest to worry about. Or I should say a full month. It might be 2 months or 3 months, but it's never going to be half of a month. So we're going to take this data and we're going to use it in the overall cash budget. So just a quick view. I have a completed cash receipts budget for this same period of time and a completed cash disbursements budget. Zoom in there for a bit, for the same period of time as well. In fact, we don't really need all these cells. So this is the information we're going to need for the overall cash budget. But the interesting thing is that the only pieces we need from these budgets are the total cash receipts at the bottom and the total cash disbursements. That's all we're concerned with. The detail is here if we want it, but for our overall cash budget, we just need the totals. So I have a generic template here. First thing I'm going to do is fill in the actual headings. This is our quarter ending March 31st. So we have January, February, and March. We need to know our beginning balance. Now again, that's informational only. Well, it's also part of this particular reconciliation, but this is information that'll flow over to the balance sheet as well, the cash balance. So that's why it's informational for that purpose. I went ahead and created the template with the labels because they can get a little bit confusing. So I wanted to put that in here, and we're just going to figure out where to get the information from. I've also grayed out some of the cells that, won't matter. So I've graded those out just to simplify this example. So what we have here, we have beginning cash balance. We have cash receipts for a particular period, which is from the cash receipts budget. It's just the totals. Now, the sum of the beginning cash balance and the cash receipts is going to give us the cash available. From that, we'll subtract out our cash payments or cash disbursements, and that tells us the ending cash balance at that point in time. If we didn't have any of this minimum balance issue to worry about, then we'd be done. But the fact that we have a minimum balance, which, by the way, we said needed to be $20,000, that's what this line is all about. $20,000 for each quarter. So we never want to fall below that. So I'm just going to enter that. The projected cash excess or deficiency is going to be our current cash balance minus the $20,000, and hopefully we have some left. Hopefully this is a positive amount, but if it's negative, it'll be a deficiency. Now, if there is any deficiency, we have to borrow to get it up to $20,000, and then we'll pay back both principal and interest as soon as we have enough money to do so. The effects of financing is going to be the net amount of these three. In some months it might be positive because we borrowed money. In other months it might be negative because we paid it back. Finally, we get the ending cash balance. So let's take a look at how we do this. The first thing we need is the beginning cash balance, which it tells us December 31st, 2017 is $3,500. So that means January 1st is also $3,500. We don't know the other 2 months yet. We'll have to calculate them based on the prior month's ending balance. We need cash receipts. These are just going to be straight from the cash receipts budget. So you can link them to this, which, in fact, I'll go and do that. I'm going to link it. Just hit the equal sign. Go back and click this number, and you can see at the top there's a formula. When I hit enter, it's going to take us back to the overall cash budget, and you'll see that it's now linked to the cash receipts budget. I'm going to do the same for February. Grabbing February's budget, it's there, and the same for March, and now we have that. I could have done the total as well, the quarterly total, or I could just sum these three up, whichever one works, whichever works best for you. Now, cash available. This is simply going to be the beginning balance plus the cash receipts for any given month. I could just do it 1 month at a time and re-enter this formula every time we get there, because keep in mind we don't have the beginning cash balance for these other months yet. Or I can just go ahead and drag the formula over, knowing full well that right now this formula doesn't have everything it needs, because as soon as I enter something for February or March, this will update. It's a formula, so it's not static. It'll update when I have something in. Just to give you a quick show, I'm just going to plug in $100. It's $54,175 right now. If I plug in $100, it updates to $54,275. Of course, that's not the right amount, so I just wanted to show how it's fine leaving the formulas in here even before you have everything filled out. Cash payments, it's going to be the same thing we did for cash receipts. I'm going to put in the equal sign and go to the January total cash disbursements. I'll do the same thing for February and March. And this time I will do the quarter. Cash payments, again, either way would work. I could sum it up, or nothing's going to change this because we've already completed that other budget. So I could sum it up, or I could just grab the total from there. Either way is fine. Now we have another subtotal here, ending cash balance before financing. This is the cash available, which is our beginning cash plus our cash receipts, minus the cash payments. In other words, we had $55,500 cash throughout the year, but we paid $37,050. Therefore, we ended up with only $18,450 left at the end of the month. The problem is that's below our minimum $20,000, so we have an issue. We're going to have to borrow money. Now, the way this formula should look, it should be this top number, the actual ending cash balance, minus the minimum desired, and that tells us we're short by $1,550. If this was above $20,000, it would be a positive amount and we're good. But it's $1,550 short, therefore we're going to have to borrow that money. Borrowing has a positive impact, and in other words, we gain more cash. Now, we don't have anything to pay back at this point. In fact, we couldn't because we'd fall again below the $20,000. So for this month, it's zero. The total effects of financing, they're just the sum of these three amounts. $1,550 because we gained $1,550 in cash. Now, the ending cash balance is going to be what we started with plus this total effects of financing. And lo and behold, it's $20,000 because we borrowed enough money to get there. February's beginning balance is going to be January's ending balance. So I'm just linking down to that. Now you'll see it updated. We started with $20,000. We gained $54,175. That means we have $74,175 available minus our cash payments of $50,500. And if I subtract the two now, we have $23,675, which is above our $20,000. So if we do our subtraction again, now we have $36.75 extra above and beyond what our minimum was. That's a good thing for this month because that means we have plenty to pay back our principal plus the interest without falling below $20,000. So what that means here for the financing area is that we're going to have to subtract $1,550 from our cash because we're paying that principal back. Oh, actually, let me back up. The borrowing itself is zero. The principal repayment is the negative $1,550. We're paying back that principal. And we also have interest to worry about. It's going to be a negative number because we're paying cash out. But what it is, we only borrowed for 1 month. So remember I said 12% per year divided by 12 months is 1% per month multiplied by the amount we borrowed. And I intentionally have the negative there because it's going to be a negative $16 cash outflow. Now we will just sum these three up. Oops, somehow got removed. So we'll sum up these three items. And of course it's negative because we're paying extra money out. It's $1,550 plus the $16 of interest we're paying. So what that means now is that to get our ending cash balance, we go back to the $23,675 we had before financing, and we add the effects of financing, which in this case is a negative number. So we're adding a negative, which ends up subtracting the amount. We had $23,675. Now we have less because we had to pay our principal and interest back. For March, this beginning balance is coming from the ending balance. Again, it updated our formula. The ending cash balance before financing is our cash available minus our cash payments, and you end up with $23,481. Now, by the way, I do want to mention something here. With the cash payments, you may ask, why aren't these negative? And we put it in the label that we're subtracting these amounts out. So from our cash disbursements budget, they were considered positive amounts because we know in that budget we were looking for what are we actually paying, which we're paying a positive amount to somebody. Of course, it reduces our cash, but it's a positive amount of what we're paying. So if you have it as positives, you just need to remember that in your formula you need to subtract it out. If your template desires these to be negatives, then of course you're just adding the positive and adding that negative to it, which has the same impact of subtracting the number out. Just take a look at it and see if it follows the logic you'd expect. If we had $78,000 and we paid out $55,000, you know that that amount has to be smaller than $78,000 rather than larger. That'll be the way to know whether your signs are in the proper direction. We have $23,481. We wanted $20,000. So subtract them, and we're above by $34.81, which is good. We don't have any borrowing. We don't need any borrowing this period. We don't have any principal or interest to pay back. Therefore, the effects of financing are zero. And our ending cash balance is basically the ending cash balance before the financing, because if you add zero to it, we can do it, but it's still the same amount, $23,481. So that is the majority of our cash budget. The only pieces we have left are the totals. So the beginning cash balance for a quarter is actually going to be the very first month's beginning balance. The ending cash balance for the quarter is going to be the end of the very last month. And everything else, you can either have a subtotal, you don't necessarily need it, depending on what your instructor asks for. I'm just going to carry down the formulas. They're the same. You can see we're adding across the row. And again, we end up with $23,481, and that was the purpose of this exercise, to go through the overall cash budget. So we'll see in later reviews how this fits into the rest of it, the balance sheet specifically. That's where cash comes into play. Hopefully this has helped to clarify this particular topic, and if you do have any additional questions, please let me know. Thank you.